Yeah, now it has.
Sorry, I just had to get rid of the annoying pop-up that was on my screen. I'm an auditor. I'm an accountant, a consultant, and a tax professional. And I work with just about every kind of sector. So I work with individuals, I work with sole proprietorships, with corporations, NPOs. I've done a lot of NPO and charity related work. And I also do deal with US and cross-border taxes. And I am an educator with over a decade of experience, and I feel like I can now write this down because it's pretty much exactly a decade. So um, this is kind of funny, but I actually started my very first client in 2012 when I graduated high school. And I had learned how to use QuickBooks over the summer. So I was like, okay, let me see if I can get some clients. And I would go to class for accounting, and it was like beginner accounting in first year university. Like in that summer, I got some clients, and I would go to class, and I'd come out of class, and I'd deal with my clients, and I would do just bookkeeping for my clients. And this was so weird to even think about now, but I know a lot of my friends at university would be very confused as to how I could do bookkeeping and accounting when I just started my accounting degree. So alhamdulillah, it worked out. So I've been working since then. I've had clients on and off. And these are some of the things that I do in my within my practice. So I do a lot of financial literacy. I really enjoy that. Bookkeeping, accounting, as I just told you. I do a lot of tax work as well. Tax is definitely one of my passions, which is why I'm happy to do workshops related to tax. One of the things that I remember, even for tax, I had done 2 tax internships before I took my very first tax course. And I would ask my professor all these like really difficult questions related to tax. And I guarantee you, he did not like me by the end of the semester. So enjoy all of the financial related stuff. And I think my goal always is to do something and to take whatever that I've learned and do something beneficial for the community. And that's the motto. That's why I'm doing some of these presentations. That's the reason for kind of just inviting people and hopefully elevating our community as a whole. Okay. All right, so we'll get started. And before I get started into the actual workshop itself, like the tax details and stuff, I want to go through some of the definitions. So when I am speaking to these matters, that you're able to kind of just put them in the little boxes and assign them to the appropriate definitions. So I know that the title of the workshop is like credits and benefits. So we'll just talk about benefits and credits. The definition of a benefit is a one-time cash payment or a recurring cash payment based on a government program. So with respect to this workshop, we're only talking about like provincial or federal or territorial programs that the government offers and the tax implications of those and any benefits that we can get from there. So the definition of a benefit according to like the tax, the government perspective, is that it's like a one-time cash payment or a recurring cash payment. So think about the COVID benefits, for example, that we had available to us. So that was like government giving you money directly into your bank account. Some of those things had tax implications, others did not. And so recurring or one time, but it is like a cash payment to you. A credit, on the other hand, is a credit against the amount of taxes payable. So the example I would give to you is, I don't know if a couple of years ago, maybe some of you remember, there was that children's activity tax credit, or every now and then they come out with like some unique programs. And essentially what that was is if you enroll your kids in like, physical activity, whatever fees you paid, you would get a credit on that. That is a tax credit. It is not a cash payment like a benefit. It is meant to reduce the amount of taxes that are payable. So keeping those 2 things in mind when we go through some of the programs that I've listed here, you'll be able to kind of assign, like, is it a benefit? Is it a credit? And if anybody's kind of confused, like I do have Q&A towards the end, but feel free to like raise your hand and just ask the question. So I don't feel alone talking to myself. The last definition I want to go through is deduction. And no, this was not in the title of the workshop, but we're going to talk about at least one deduction. And I kind of wanted to give you the definition of that as well. And this is also either recurring or a one-time, depending on the deduction, an amount that will reduce your total income and then thereby reduce your taxes payable. So it's not meant to directly reduce the taxes payable, but it's actually going to reduce your income, your total income. So think of things like RRSP. So when you contribute to an RRSP, you get a little bit of that tax break. That is a deduction for our purposes, for tax purposes. So hopefully those three definitions made sense. And here are now a list of sort of the programs that I wanted to discuss with everybody. Some of these are going to be a little bit obvious. You may have heard of them, you may have seen them. And what I want to do, and if you guys are willing to just kind of like use the virtual hand raise, I want to be able to see when I go through these programs, if you have heard of it or if you are already utilizing this. And it's just to gauge where we're at and to see if I need to speed along, if I need to stop myself, but I am curious to know. And then I'll do some quick mentions, things that I don't think are going to be applicable to most of you, but I kind of just wanted to put it out there and see, okay, just to give the ideas to you. And then, of course, you guys can take a look at this afterwards. We'll go through a tax structure, and that is a visual that I've created. It's like a bit of a flow chart that I created to help you kind of take all the information that we're going to learn and just put it into a, its boxes in a visual manner. And that is unfortunately the only photo we will see in the entire presentation because unfortunately tax does not have as much part. So we'll open up the floor to Q&A after that. And then I'm more than happy to give you guys resources. I've already sent it to Smile. You'll get a sheet of all the benefits and credits and all the programs that we talked about right now. And then in addition to that, it'll be sort of like it's link friendly. So you'll be able to click those links, take it directly to the government site so you can apply for those programs and learn more about them. And within that resource, I haven't just included these. I've included a lot more programs that you can benefit from. Here are some of the common ones that I think would be applicable to most of you. And that's the reason I put it in there. All right. So very quickly, just by like a show of hands, if you guys are able to, some of you are on your phones, I'm not sure if you're able to raise hands on your phone, but if you're able to, how many people have heard of the disability tax credit? Let's see a couple of people. This one is definitely the most popular one. And I'm hoping that if you learn nothing from this, the very essential thing that you need to take away from this workshop is that you need to apply for the disability tax credit. So the disability tax credit is a non-refundable tax credit. So if we go back to our definitions, a credit is meant to reduce the amount of taxes payable. This is a non-refundable tax credit. There are some refundable tax credits as well. So the DTC is one of the most common one. It's almost like a starter, like a starter place for anybody who has a family member or has a disability that you should register for the disability tax credit. And essentially it's a way for you to register your disability with the government. And it actually opens doors to many other programs. So for example, ODSP, which is Ontario Disability Support Program, and that one, it says you need to be eligible for the disability tax credit to apply. So there are numerous programs that are going to be available to you if you are registered with the government for your disability, and then you're eligible for the disability tax credit. So what it does is supports the families to reduce your tax balance. Families, when I say families, what that actually means is if you have a child with disability, they're unable to use that credit, the credit can be transferred to a parent or a family member. But if you have an individual who's over 18 and under your care, you are also able to utilize the disability tax credit because whatever amount is unused by them, let's say they're working a little bit, but not really, or they're working but not utilizing that credit, that unused amount can be transferred to you as a family member to help reduce that tax balance and that tax burden at the end of the year. I do see something in the chat. I'm going to open it up. Yeah. So I'm gonna keep that question till the end because it's a good question. It's an excellent question, but I'll keep that to the end if that's okay with you. Okay. So one of the things I do want to point out for anybody who isn't registered for the disability tax credit, that when you do, you're going to fill out the form. You're also going to have to take it to a medical professional, and they're going to fill out the disability portion. And that's how the government verifies your disability, is through that medical professional. It's really important for you to check off this box. And I wanted to make a special mention that I'm not mentioning the entirety of the application, just this particular piece, that if you had a disability, if you have a disability today, but you haven't applied for the disability tax credit, just check off this box so that if your doctor is aware of those disabilities or those impairments, in past years, that they will make mention of that within your application, and you will ask CRA to automatically adjust your taxes for the previous years. And so just make sure you check off, yes, I want my adjustment, I want my taxes to be adjusted for the previous years. And this may or may not be the case if you aren't above 18. You may actually have to file those taxes if you are claiming it for a child or a dependent, and even a spouse or even a parent. If they're dependent on you, you're able to claim that disability tax credit from their taxes as a transfer. Okay. Medical practitioner fees. So when you go to a doctor, even if I need a sick note, something like Narjis sneezed today, they usually do charge you some fees. There is a reimbursement for that fees. It's not a reimbursement, but it can be claimed as a medical expense within your taxes. So just keep that in mind. And I've kind of just listed a quick overview of some of the medical professionals that you need to reach out to in order to fill out your disability tax credit application. The beauty of it is that this year, and I believe maybe it started last year, but in the recent year or so, they have now translated that disability form to an online form. So if you have a My CRA account, you can go in, submit your pieces of information, like your name, address, all that information that goes into the disability tax credit application form. And then I think you can also connect it to and send it off to your medical professional. They can fill it out. Any online application, I believe, is expedited because it's within the CRA system. It makes it easier for them to expedite those requests. And then you'll be able to hopefully get a response from CRA sooner, because they do need to approve that registration of that disability. Okay. So we have a couple more questions. So maybe I'll give it a pause here, because I guess I was expecting more of you guys to have this, but this one is an essential one. So maybe I'll pause here and then kind of just go through some of those questions, if that's okay. Okay. So my child is approved until 2024. Is it an automatic renewal, or do you have to reapply? Some disabilities are able to be automatically renewed, others not so much. The best thing for you to do is if you go on, I think if you have your My account, you'll see when that disability ends. Take it to your doctor. The reason they do have an end date for some of these things is they don't expect them to be either life impairing, or they don't expect them to last a longer time. So they like either a second verification if it is, so for example, life altering, unfortunately. They do after a couple of years for you to go back to the doctor and for the doctor to give them updated information. So you may need to reapply unless you've gotten one of those, unless you've gotten, a statement from your doctor when you initially applied saying this is it. This is life altering, unfortunately. And at that point, CRA would have made a decision to give it to you indefinitely. So I've seen definite ones, and I've seen ones that have a time frame. Another question says, okay, my doctor mentioned that it is not possible for me to get the disability tax credit because my son is higher functioning. So you may have gone to just a regular medical professional, maybe if you just went to his, family doctor. I don't know if you would have taken that and gone to a more specialist. A specialist might be able to help you further. But if a doctor is unwilling to, take it to another doctor, because at the end of the day, the doctor is someone verifying it. You're the one that is aware that your child has this particular issue, or you have this particular issue. So go to another doctor. Like I wouldn't, stop myself from applying for this program and applying for the additional programs that comes with having a disability registered with the government. Just because one doctor said no to me, go to others. It can be high functioning. So they may say, okay, we'll give it to you in 1 year, X, Y, Z. Or it might even be something where if your son turns 18, that creates a whole boatload of like, you're registered, now you're an adult. And okay, well, is his impairment preventing him from studying at the same level as other people? Is it preventing him from working at the same level as other individuals? Go to another doctor. Do not take no for an answer in those situations. And okay, so the next question is, if I'm a parent, sorry, I'm not a parent, but a primary caregiver, can I be eligible for disability tax credit? Yes. If so, what documentation is required? So same scenario. It's like, if you're a primary caregiver, we'll talk about the caregiver credit that you do get. But the disability tax credit, if it is registered for someone that is your dependent, so like I said, it can be a parent, it can be a spouse, someone that is living with you, you're taking care of them, they are dependent upon you. You just need to make sure that you have that disability registered in their name first and foremost. And then after that, it can be transferred to you. So it's literally a line that says that, on the taxes, it's like, do you have a disability transfer that you're getting from parent or someone that is your dependent. So that would be the process. You would still have to get their disability registered under their name. Okay, sorry. So this is a follow-up. Diagnosis is autism and it won't change. Yeah, I would speak to your medical professional and just ensure that essentially the CRA would have made that assessment based on what they wrote on their depending on what the medical professional wrote on the application. So talk to your medical professional to make sure that whatever they're writing is, translated in a manner from CRA that it is indefinite and it does not require you to come back. Again, they might still want you to reapply every 5 years, every 10 years, but it shouldn't be just a 1 year thing. Like that doesn't make sense to me. And it's not something consistent with what I've seen. Okay, so I have a disability tax credit until 2027. I've never been given money. Okay, I never get money. Sierra told me that you're on DSP, so you're not working. So this one is a very specific question, Sumaya. I think for me to answer that, I would have to take a look at your situation a little bit in more detail, and I'm happy to do that afterwards. I'm happy for us to have a conversation, but there are a number of factors that can go in. It does make sense that you're getting that message, but again, I'd have to look at your entire situation and see what it is that is increasing your income, decreasing your income, what are the credits or benefits that you're getting, because some benefits, as we talked about, benefit is a cash payment. If we talk about, for example, the COVID benefits that we got that cash payment, but then you had to pay taxes on it afterwards. So, even the benefits get considered as your income. Some benefits get considered as your income. So it can skew, for example, even the brackets of income that you have to be in for another program, for example. So I think we're just gonna have to connect after to take a look at the whole situation. Okay, yeah, and I'm more than happy to discuss with anybody who needs to discuss afterwards in more detail, so we can take a look at that. Okay, so I'll move on to the next one, which is a child disability benefits. And so just like we talked about, the fact that you have a registered disability with the government is going to allow you to, sorry, I don't know why there's a random pop-ups on my screen, not fun. Okay. Having a registered disability with the government will allow you to apply to other programs. So in this case, you see the child disability benefits. To be eligible for it, you need to be eligible for the disability tax credit, and you need to be eligible for the Canada Child Benefit. So that monthly CCB that you get, or quarterly, or whatever it is, there's too many names and too many frequencies for me to remember exactly which one this is. But this one is tax-free. So this program, similar to CCB, does not have taxes attached to it. So essentially, if you were in the low income bracket as a family, you'd be eligible for CCB. And what they're saying is if your child has an impairment, that the government is willing to kind of supplement that with a little bit more money because of the difficulties that come with that. So low income families would be eligible for the CCB, and then low income families with children who have disabilities would be eligible for the child disability benefits. Okay. This one requires no application, so hooray, it is paid automatically if you qualify for both of these. If you are not getting it, if you're not aware that you're getting it, take a look at your CCB statements. I think you do get some kind of paper saying like, oh, this much was deposited at the end of, month X or month Y. If it does not include the child disability benefit, call CRA, have a conversation with them. That's always the first place to start. One of the things I always tell my clients, and just about anybody that I meet, is we need to stop being fearful of CRA. So if you have a question, they have a phone line, reach out to them, call them, ask them, why am I not getting this? Am I getting this? Can you please guide me? And they usually, outside of tax season, are more than happy to answer those questions and guide you. And then if you find yourself in a position where you're not getting a particular benefit, you can always reach out to a tax professional or whoever is assisting you with your financial situations, and take it from there and see what you need to do in order to apply and get those benefits. Sometimes it's something really small that's required from your side, and Sarah will tell you, please give us this, and we'll be able to give you, be able to enroll you in that program. So, okay, all right. CPP for disabilities. So this is going to be similar for, so this is a little bit different. So CPP, of course, Canada Pension Plan, is usually for individuals over 65. When you retire, you get some CPP benefits because you've contributed to CPP your entire life when you're working. If you are under 65 and you're unable to work for whatever reason, as long as you've made, or you were working and then unfortunately, whatever, transpired, you're unable to work now, you are able to obtain CPP disability benefits. So this is, again, a benefit. So you get that sort of cash payment. It is not a credit. So you'd be able to get, whether it's a monthly supplement or whatever, you'd be able to get that on a monthly basis or on a particular timeline basis, because CPP disability may not be for the entire term. But in order to do that, you must have worked a little bit in order for you to have contributed a small amount. And I think the minimum you'd have to contribute is, 4 out of the 6 years, you must have made contributions to CPP. So I would think that this is not necessarily for individuals who have a life-altering disability, but for example, if you had some issues and you, have an impairment at this point, you've been working, and now due to your disability, you're unable to work, you've made those contributions to CPP, this would be a great way for you to get some supplements back. So again, a mental or physical disability that regularly stops you from doing a substantial amount of work. And it can also be a life-altering one, but for individuals who are, I would say, previously contributing to CPP, and they can no longer do so because they can no longer work. The maximum monthly payment is $1,500 in 2023. That changes depending on the year and so forth. So I'm maybe gonna give it a quick pause because I do see a couple things in the chat. Can I get your email? It's at the bottom right there. So feel free to reach out to me. I do have an Instagram handle right here at the bottom of every slide, as well as my email, so thecreativec@gmail.com. And I'm more than happy to help you fill out the disability tax credit forms and guide you with whatever it is that you need. Okay. All right. Okay, so I'll move on to the next one. So this is CPP disability benefits. The next one is the RDSP. This is similar to an RRSP minus the tax implication. So if anybody's heard of the home buyer plan that you can get, you know how you can contribute and there's like a delayed tax implication. There's also the tax-free savings account. Think about this in terms of future planning. For whether it's a child, whether it's a parent, whether it's yourself. But this is essentially a savings plan so that you can retire a registered savings, like an RSP, like a retirement plan, but specifically for disabilities. So they've removed the tax component of it. Any contribution that you make in or any amounts that you take out are not tax deductible or are not taxable. So there's no tax implications here. What they've done instead is, instead of giving you like an annual limit for RSP, you have an annual limit that you get. There's a lifetime limit of $200,000 that you can contribute. The key here is not necessarily the RDSP, but what comes with the RDSP. So what comes with the RDSP is the ability to get bonds and grants from the government of Canada. I won't be speaking to the bonds part of it, for obvious reasons, but for grants, you are able to get the Canada Disability Savings Grant, which is a matching grant that you can get. So you can get this grant up to when you turn 49. Again, depends on the income, depends on your contribution. And CRA themselves have told us that the optimized contribution for every year is $1,500. So if you were to contribute $1,500, you're able to maximize on that savings grant piece and get a little money from the government. Because I said that there are no tax implications, I just want to clarify. Let's say you put in $1,500 into your RDSP. So you go to the bank, you open an RDSP similar to how you would open an RRSP, okay? You contribute for $1,500 a year. You now have access to Canada Savings Grant. They do the matching and they put in, the matching amount the matching maximum that they can put in from their side. At this time, there are no tax implications, absolutely none. You can even take amounts from the grant and then put them into, I don't know, equities, put them into investing, whatever is available to you to grow that balance, you can do so. The moment you pull out anything that the government has paid you, so if I put in my contribution and I take it out, there's no implications. But if I put in $1,500 and I take out $2,000 because the government matched it, that differential will have a tax on it. So I just want to put that out there. And I know it's a little bit tax heavy, but just know that at this time, if you were to make contributions and remove those contributions, the contributions themselves are not going to be, are not going to have any tax implications. But if you were to pull any additional income out of it, they will have taxes. But the idea, once again, is that you wouldn't pull them out at this point. You would pull them out at a later stage in your life when you need to pull them out. So the maximum yearly grant matching is $3,500, and there's a $70,000 limit over your lifetime. So sign up for this ASAP. Contribute whatever you can. But essentially, you now have access to up to $70,000 over your lifetime. But let's just say $3,500 over the year that the government is willing to match with the Canada Disability Savings Grant. So I think it's an excellent program, and I think that we should all start taking advantage of it. I think I'll maybe pause here for a quick second and see if there are any further questions? Okay, so nothing in the chat. So I will continue on from the RDSP to the disability support deduction. The disability support deduction is the only deduction that I'll talk about. And I want to take us back to the definitions that we talked about. A deduction is meant to reduce your amount of total income. So think things like RRSP, which has a tax implication. It would reduce your total income. So the disability support deduction is mainly for device and for assistance. So if you have a disability on record, so going back once again, having a disability on record is the first starting point. It's the starting point for all of us at this point. If you've got a disability on record, you're eligible for the disability tax credit. You can utilize this disability support deduction to reduce your income, to reduce your net income on your taxes. So let's say you go to work, or let's say you're a student and you need a particular assistant, an attendant, a particular device. So, kind of listed some of the examples here. Maybe, a device or software, a speech synthesizer, you've got coaching here, you've got note-taking services, a very common one. I know that was something, as part of the university for note-taking for the accessibility centers. But if you need some of those assistance and you're paying for that, and you're a student or you're working, you are permitted to deduct those from your taxes. So deduct those, meaning reduce the amount of income that you have, and then you would essentially reduce the amount of taxes you'd have to pay at the end of the day. Okay. So this one's a great one to take advantage of if you use a device or particular assistance. The next one is a refundable medical supplement. So there is a medical tax credit, which I'll mention very quickly as well. But I think that one is also a little bit common, so I didn't put in a whole slide for that one. But essentially, a medical credit would have given you a credit against your taxes payable. You're able to claim X amount or Y amount of medical expenses depending on your income, depending on the threshold that you meet. This is a refundable one. So keeping in mind a tax credit can be refundable, but it can also be non-refundable. The regular medical expense that we claim, that a lot of people do claim on their taxes, is non-refundable. And it is available for individuals who have had income, it's medical expenses over 3% of their income. This is different. This is a refundable supplement. So it is, I would say, tailored towards, and this is like, after reading that, the program, this to me is tailored towards adults in low income brackets. So you may be able to claim this supplement because there's, income criteria attached to it. If you claimed disability or medical expenses, you were a resident, so 18 years old and older as well, and you got a income threshold of 55, less than 55 as a family income. And then the employment and self-employment income criteria are there as well. So if you were to claim this amount, it is refundable, but because it's a refundable credit, it kind of goes along with your taxes and you get it as a tax refund at the end of the year when you do your taxes. Hopefully, I'm not going too fast. I know it's a lot of information. So maybe I'll pause here and see if I can take any questions. Okay, I do see a couple. So I won't read out the sensitive question out loud, and maybe that's something that we talk about afterwards. Someone is working part-time. Is my son eligible for child disability tax credit? If you're saying you're working full-time, is your son above 18 and paying taxes? If you are a dependent of that individual, then they're able to claim you in a similar manner. Maybe we do a follow-up on that question towards the end. Who can apply for the RDSP? If we go back to the RDSP, that's the Registered Disability Savings Plan. Anybody, as long as you have a disability on file, you go to the bank, similar to when you open up an RRSP or a TFSA, or the new home buyer saving plan or whatever that we have going on. You would literally just open that account with your financial institution. So of course that comes with sort of just gaining an understanding of what happens when you lose your disability status. Do you have to close the account? And there are kind of situations related to that. So if you are registered and you've got a registered disability, then you are able to go to the bank and open this account. And then again, it gives you access to the Canada Disability Savings Grant, which I think is the major benefit here. Okay, is it possible to share the PowerPoint via email? I think this session is being recorded and it will be entirely available. I can speak to the small individuals and see if they would benefit from that. But anything that I've talked about, I have created a resource sheet for, and it's going to be emailed to everybody who has participated in this session or even signed up for this session. And within that resource sheet, I've listed every single program. So anything that you see here is listed in there, and it has links to the government's website. So you just click on the little link, it'll take you to the government's website. You can read about it, you can read about the eligibility criteria, and you can just apply directly on the government's website in a lot of these cases. A lot of the applications are now moving to an online application. So I would also say it's really, really important to have a MyCRA account. That's definitely something that I think we all should have. I know a lot of people still don't, but take a moment to create a MyCRA account. It really gives you a lot of visibility as to what's going on with your tax situation. Takes the mystery out of it. Yes, there will be a recording, so that sounds good. All right, so I'm going to move on to the next one. So we were on the refundable medical expense supplements. This is the Canada Caregiver Credit. This would be for people when they are supporting. So this is very specifically for people who have dependents who are supporting individuals with a physical or mental impairment. So, I've mentioned time and time again, your dependents include your children, your grandchildren, your parents, and sometimes siblings as well. The definition they've left to be quite broad, but essentially anyone who is dependent on you and you are caring for this individual, you are able to claim the Canada Caregiver Credit as long as there is a disability. So the disability is ideal, but not mandatory for this particular one. But I've seen people being able to claim it for aging parents, for example. So that's definitely a benefit here. The claim is dependent on income, of course, and depending on your income, it will just reduce your amount of taxes payable. So keeping in mind, a credit reduces the amount of taxes payable. That is what's offered to you here. Okay. All right. So everything that I have just talked about up until this point was all federal programs. The only provincial program I will mention, because I'm in Ontario, I think majority of you are in Ontario, is the Ontario Disability Support Program. This is what I briefly mentioned at the beginning. To qualify for this, you also need to be eligible and to have that disability on record. So ODSP is a monthly support supplement. So it's a benefit, going back to our definitions, giving money on a monthly basis. You must be 18, Ontario resident, and they have some limitations for assets and for income that you need to be within that particular threshold, whether it's a family or as a single individual, in order to meet the definition. I believe there is a supplemental like application that you have to do for this one as well. But you can always go back to the resources that I'm going to provide to you, which will state ODSP. Go to the website for the ODSP and take a look at the application process and get started on that. So if you have a disability and you live in Ontario, I wanted to introduce this concept to all of you. Okay, all right. So a couple quick mentions. There is a CPP children's benefit for children under 25. This one I didn't really think would be as applicable to talk about, so I'm kind of just briefly mentioning it, just a quick mention. So if your parents contributed to CPP and they had a disability, you as a child are permitted to claim it. There's survivor's child benefit as well for a deceased contributor and who presumably is deceased due to a disability. But there's a lot of intricacies to this one, and I don't think it's applicable to most of us. And that's why I kind of just wanted to quickly throw the idea out there just in case it might be applicable to someone. And, if it is, it'll be part of the resource sheet. Feel free to take a look, read into it, and see if you're eligible for this program and apply for it. Okay. The next one would be the medical expense credit. I briefly mentioned it. This is the regular expense, medical expense credit that you can apply. Anybody can apply this. This has absolutely nothing to do with disability. So just if you have had a year in which you've had a significant amount of medical expenses and they go above the 3% of income, you're able to claim that on your taxes. So in a particular year, I've had clients who come in with like a whole stack of medical expenses, but then their income is like, I don't know, 100,000 or something. And you're not going to get to that stage where your medical expenses are above the 3% of income, so they won't be able to claim it. So if you've had a year where you've had a significant amount of medical expenses, regardless of disability, you are still permitted to apply for the medical expense credits. Okay. An amount for eligible dependent is also something. So let's say you're
recording in progress.
Sorry, I don't know. Do you mind putting it on mute? Thank you so much. Okay. Amount for an eligible dependent is something that you can claim if you are a single individual for the most part, or you're able to claim your children as an eligible dependent, or if your spouse has the impairment, you're able to claim an amount for eligible dependent. Again, this one is also almost automatically, like when you do your taxes, if you went to a decent tax professional, or even if you use a decent tax software, like it would be automatically able to claim this amount for eligible dependent. And then the last one is the working income tax benefit supplement. So a lot of us, depending on the income bracket we're in, get the WITB. I know, it's like it rolls off my tongue for some reason. It's a working income tax benefit. This is a supplement for individuals who have a disability. So not only do you get the WITB, but you also get a little bit more, an additional amount based on if you have a disability. So I, again, just want to kind of quickly throw it out there. Didn't think that it needed a significant amount of time, but in case this is applicable to you, take a look, read into it, ask questions, and feel free to reach out. But wanted to introduce some of these ideas to you. I'm going to give myself a quick pause. I do feel like I've been talking way too much and talking for too long. We're going to see if we have any additional questions. Okay, so nothing at this point. So the one and only photo that you're going to see, or as photo as it gets when we're talking about taxes. So this is just a drawing that I really wanted to hopefully be able to give you some kind of visual for all the information that we kind of just absorbed. I know I've been going off of the definitions, but in terms of how a tax structure works, I wanted to share this with you, and I'm hoping this will just give you a little bit of a better sense of as to how the tax structure is outlined. So you start off with your total income, okay? So that's your employment income, any other income, honestly. And some of the items that would contribute to your income is, for example, if you're getting some kind of disability benefit, the ODSP, for example. Actually, the ODSP it's not taxable. But if you are getting any kind of benefit that is taxable, it would be part of your total income. So the grant that we talked about, so if you open up an RDSP and you get the savings grant and you got additional money from the government that you then pulled out of your RDSP and utilized it, you would get that, you get a slip for that, that would be included in your income. So those would form part of your total income. So that is always the starting point for taxes. Then after that, you have your deductions. So we talked about RSP being one of the deductions. Then there's a disability support deduction. So when we talked about being able to obtain devices or assistance, you're able to utilize that deduction. That would be here. This is where you have that deduction. And then total income minus deductions equals your net income. Your net income is used in many, many cases for determining eligibility. So if you were, for example, applying for ODSP and there's an income threshold, like you need to have family income between X and Y and Z, the number that they're using, the line number that they're using from your taxes is the net income line. So you can see if you apply for one particular benefit, it can skew your calculation of what your net income ends up being. So keeping that in mind and trying to optimize, but also recognizing that you might not be eligible for every single benefit or that is available that I've mentioned because of those thresholds. So that gets you to your net income. Then you've got refundable and non-refundable tax credits. Non-refundable tax credits, we just talked about the medical expense tax credit, which you don't need to have a disability to claim that. You've got the disability tax credit, which is the very first tax credit we talked about. The Canada Caregiver credit is also available. And all of these form non-refundable tax credits. Okay, so if you have a tax payable, these non-refundable tax credits will be the first to help and reduce your taxes payable. Let's say I have the disability tax credit, I have the Canada Caregiver tax credit, but I'm working so little that my taxes payable is so minimal, they're going to cancel each other out, and that's it. If your disability tax credit is more than the amount of taxes payable, this is non-refundable. It gives you no additional benefit. That's it. These non-refundable credits are only going to benefit you up to a point where you are making money. And that's the big distinguishing factor between a benefit that is paid to you monthly and a tax credit, which is only going to be beneficial if you have taxable income. When you don't have taxable income, you can have the disability tax, so you can put that amount in there, but it's actually adding nothing to your bottom line. Then you've got the refundable tax credits. So with the refundable tax credits, there is the supplement one, the medical supplement one, that is definitely, that's refundable. You've got some parts of the, I think my slide might be a little off in here, so I'm gonna go off of the things that I know. These three are not all refundable. The medical expense supplement is refundable. There are a couple of the other refundable credits that we talked about. Those would still be paid to you as part of your taxes, even if you did not make enough income and did not have enough taxes. So if you didn't work a lot, let's say you had, I don't know, I'm going to go off of a random amount. You had $1,000 of taxes payable. Then your disability tax credit kicks in and it absorbs that liability. Great, you no longer have a tax liability. But you do have medical expense supplement, which is a refundable credit. Whatever you claimed as part of your medical expense supplement goes to you as part of your tax refund. So you do get money back at the end of the year when you do your taxes in April or whenever. You will get that as a total amount as part of your taxes. Refundable. Hopefully this image helps a little to clarify things as to where the different buckets are. You've got credits, you've got deductions, and benefits are, if they're non-taxable, they're outside of the realm of this diagram. Okay. All right. So I think what I'll do now is, I know that you guys have been putting questions into the chat, but maybe if you want to open your mic, open your cameras, ask me the questions. I'm hoping some of this information was